The candlestick is one of the most important tools when it comes to technical analysis, and that is why you must have to know what kind of candlestick that you are trading when you are placing your trade. That is why in today's video I'll be talking about candlestick infrastructure so that you better understand the infrastructure of any kind or type of candle that you see on your price chart. So definitely watch this video to the very end. If this is your first time on this channel, please support this channel by leaving a like for this video, subscribe to the channel, and don't forget to turn on the bell notification so that you receive update like this when next I upload a new video. Also check the channel for other forex videos, technical analysis, and educational content. So let's dive right into the video. So right here on the Euro USD chart, you see these candlesticks are printed on the chart, and we have both combination of bullish candle and bearish candle. So we're going to know the infrastructure of a candle and any candle at all in the market. A candlestick, like I said in my previous video, is a way of showing information about an asset price movement over a specific period. Okay, so the most important thing is that it is one of the two that we use in technical analysis to know whether price is going to maybe from this very area come back to the downside, or from this very point move back to the upside. Candlestick is one of the most important tools that must be in your technical analysis when you are doing technicals. It allows traders to interpret the price movement of any asset quickly because it have all the information that you need to know about any particular asset. And right here is the infrastructure of a candle. Okay, so this is a bullish candle and this is a bearish candle. This is a bullish candle because the price of this very candle open lower at this very point, and price come back down a little bit and then move upward to this very area, and then come to this very area, create a high, come back down and close at this very point. So this is where the price of this very candle open and then move back to the downside, move upward, create a high, and then come back and close at this very point. That is how a candle move. Let me repeat again. So when a candle open, for example, in this case, a bullish candle, it open at this very point and then come back down to create the lowest price, okay, and then it move back upward and then create the highest price, and this is where the candle close during the formation of this very candle. Let's say, for example, this candle is formed in 4 hours. That means after 4-hour period, this candle is going to close, and then the next candle will form for the next 4 hours as well. So this is how a candle is formed. And when a candle open lower and close higher, we said that candle is a bullish candle. The reason is because the price of that very asset is moving from below right here or low right here upward to this very point, which is a high. So when a candle open lower and close higher, we said that candle is a bullish candle because price is moving to the upside. So, and you can see price actually creates a high. This high is the highest point that price get to during the period of formation of this very candle, and the low right here is the lowest point that price gets to during the period of the formation of this very candle. So you have to understand this very, very clearly. And this very one is a bearish candle, and it is a bearish candle because price open higher at this very point and go back to the upside, create a high, and then come back to the downside, create a low, but close at this very point. Okay, so anytime price of any particular candle open higher and close lower, that candle must be a bearish candle because price open higher and come back to the downside and close lower. So let's say this candle formed in 4 hours. That is a 4 hours candle. That also means that this is the very point that price get to, that is the highest price that price get to during the formation of this very candle, and this very point is the lowest point that price gets to during the formation of this very candle. So this is very, very important and crucial to you understanding if a market or a candle is bullish in this very case or bearish in this very case. Now, one other thing you need to understand is that candlestick can be color code. Okay, so I can color code this thing to be white and color code this very one as well to be white. So how can you know the difference between a bullish candle and a bearish candle? The difference is clear right here on the chart. It's very simple. Any candle that opens lower and close higher is a bullish candle, and any candle that opens higher and close lower is a bearish candle. That is the only way you can know the difference between a bullish candle and a bearish candle. So assuming I color code these two candles to be white or the two of them to be black, I can still identify this very candle to be bullish and this very candle to be bearish because of this very candle open lower and close higher, and this very one opened higher and closed lower. So this is the infrastructure of a candle. This very line right here and this very line right here is called the tail of the candle. Now the same thing right at this point, we have the upper tail and the upper shadow. The same thing on the bearish candle right here, we have the upper tail and the upper shadow of the candle. The same thing with the lower tail and the lower shadow of the candle. Now this very area that forms red right here is the body of the candle, and this very area that forms green right here is the body of the candle as well for a bullish candle. So where you have the close to the open or the open to the close forms the body of any candle type that you see on your chart, be it a doji, be it an engulfing, be it a harami, a hammer, or a shooting star. Any of these candlestick pattern form like this, okay, except for a morabuzo. So if you look at the euro USD chart right here, you see that the market is already at this very point of 1.07756. And if you look at this very area, market move upward. So this very candle are all bullish candle. Why? Because market is moving to the upside, and when market is moving upward, it forms more of a bullish candle than a bearish candle. And if you look at this very area, market opened at this very point and close at this very area, but during the formation of this candle, price get up to this very point. Okay, so this is the highest point that price get to, but this is the close of this candle. And if you remember, at the close of this very candle, this very one start formation. So this very candle open right here and close at this very point, so it forms a bullish candle. And if you look at it, during the formation of this candle, price get to a highest point right here and the lowest point at this very point as well. So this from here, that is the close of this very candle to the opening of this very candle right here, forms the body of this very bullish candle. Now, same thing happen when you are considering a bearish candle. So if you look at this very one right here, you see a bearish candle, and the reason is because this candle opened at this very point and close at this very area, so it forms a bearish candle because price move from a high point to a low point, and immediately after this close, this other bearish candle start formation, and at this very point price get to this very area, so it gives us a high price at this very point, which is the highest point that price get to during the formation of this very particular candle, and price come all the way down to this very area right here on the price chart. So this is the lowest point that price get to, but price did not close at this very area. This is where price close at. Okay, so from this very point where price open to this very area where price close, form the body of this very bearish candle. But this is the highest point that price get to, and this is the lowest point that price get to during the formation of this very candle. Remember, I am on the 1 hour chart right on the euro USD chart. So this is what you need to know. Now when market is coming back to the downside, it forms more of a bearish candle than bullish candle. So that means that when market is coming back down in this formation, you'll find combination of bullish and bearish candle, but you will find more of a bearish candle. And when price is moving to the upside in this formation, you'll find combination of bullish and bearish candle, but you find more of a bullish candle in an uptrend. So this is very, very important. So this is what you need to note in today's candlestick infrastructure video, and note this on your chart, and you use this in combination with what you are trading or what kind of candlestick pattern that you are trading on your chart. I believe you learned something from today's video, and if you are new to this channel, please don't forget to support this channel by leaving a like for this video, subscribe to this channel, and turn on the bell notification so that you receive updates like this when next I upload a new video. If you want to learn how to trade forex and know what to do and become a professional, check the description of this video, say contact, and reach out to me immediately. And if you've not registered with any broker, check the description as well, you see a link, and register with my recommended broker. Thank you very much for watching today's video, and I will see you in the next video.